Now, the stock market headlines, it says here, this is on CNBC, by the way. I'm not going to edit this video. It says S&P 500 notches its best day since 2022 as Wall Street claws its way back from Monday's rout. Now, at the recording of this video, the S&P advanced 2.3%, the Dow Jones traded 692 points higher, or 1.8%, and the Nasdaq Composite added 2.8%. Now, why am my glasses are a bit fucked up here. Why am I talking about this here? Because you need to understand that the market isn't really there for you. Because they know that investors, especially retail investors like you and I, are here to try to trade the news, and we are potentially trying to predict what will happen, which is what I preach against. You never want to predict the market. Your goal is always to stay consistent, but find opportunities in the market. The big deal here is this, right? On Friday last week, they had an unemployment report, which was bad. Now on Thursday today, right, things turned around a little bit because of the unemployment rate, which is a bit not as bad as expected. So in that case, it was good news for the market. And here's the deal. If you are trading the way these institutional investors trade, you will be on the losing hand. And that's because they get the news first. Most of their systems are automated. You're trading, pennies for billions of dollars in comparison to how much these guys are trading. And if you try to follow what they do, you will also go the wrong way. Let's talk about what came in the news recently, which was Warren Buffett, selling half of his stake in Apple, and most of the money or cash is now invested in treasuries. The truth is, if you choose to do that, that's up to you. Of course, this is not financial advice, but one thing to understand is that you can't do things like the way billionaires do things. For example, 1% on $1 billion is a lot of money, whereas 1% on, say, $100,000 or $10,000 isn't a lot of money. That's the truth about it. And if your goal is to build financial wealth, you need to take more risks technically than they are taking. And let me explain what I mean to you. So Warren Buffett decided to trade half of his stakes in Apple. Why? Because Warren Buffett, that's the Berkshire Hathaway, is an investment company, right? And they have people that have entrusted their money to them. So they have to report to these people on how they deal with their money. So the point here is, it's best for him or the company itself to play it safe or safer than how you and I will play. And I'm not saying that we should take all risks, right? The goal of what I really preach is that you find diversified ETFs, index funds, and put your money into it. If you feel a bit more risky and you feel like you're able to handle the ups and downs of the stock market, then maybe you can choose to do individual stocks. But what I always preach to you is, if you're new to investing and you are afraid of losing money, go ahead and buy your ETF, VTI, VOO, VGC, VV, all the ones I talk about, or go ahead and buy index funds. Index funds will generally cost you more money, especially with the Vanguard index funds. Some of them will, you can only invest in them if you have about 3,000 to start with. Some of them are even higher. Some of them are like $1,000. But the point here is they require more money with index funds. But they also have the benefits of what you get with ETF. The only difference between the index fund and ETF is that the ETF will trade almost like a stock. So you can easily buy it and trade on the market at a particular price throughout the stock market trading window. Whereas with index funds, they usually have to settle. It takes a few days or maybe a day to really get into it. So the point here is that depending on how much you have and your experience and how much risk you're willing to take, the options are there for you. But if you try to do what these fund managers, investment companies are doing, you will go astray, because they trade regularly every day. That's one. Don't forget, trading has its fees. Okay, there's a cost to it, which, whether it's your time, whether it's the trading fees itself, depending on the investment broker you're using or brokerage firm you're using, and of course the emotional toll it takes on you. And the chances of you getting success or getting significant success is much slimmer. And that's why you need to be able to, focus on your day-to-day job, like I'm working right now, and don't be emotional about investing. All right. NVDA, which is one of the stocks we've been talking about lately, has been kind of, trending downwards if you look at the chart. And the truth is that Do I still believe in the company? Yes. Am I still buying it? Yes, I am still buying it. In fact, I bought it yesterday at 101. I remember I bought one at 106 2 days ago as well. So the point here is I'm still buying it depending on the how much money I have and what the market is doing. Like today, the market is going green. I'm taking a pause, right? Even though it's still a bit low in comparison to what I believe it can get to. By the way, this is not financial advice, but the point here is you need to see what works best for you. Another company that I'm looking at is Palantir, PLTR. This company has been has been doing well. I mean, if you read their financial report recently, you would see that they're making progress in their earnings and things like business is looking good anyway. Now, I'm not saying you should go invest in it, but you understand that I started investing in it when it was, I believe, $16. And I'll tell you the truth, right? It's not like I'm all out spending a lot of money initially, especially when you're trading stocks that you are not really sure where they're going. If it's like Apple, if it's like, NVDA, if it's like Microsoft, Google, all these companies are well established. They are worth trillions of dollars, right? You are able to take a little bit more risk with them. But when it comes to companies like Palantir, I try to be very careful because you're trying to wait on what the company is actually doing. You're very, very particular about the fundamentals of the company. And right now, they reported their earnings about, I believe it was Monday or last week, and it wasn't bad at all. And as of today, all right, it says here, Palantir jumps 11% on Microsoft partnership to sell AI to US defense intelligences. This is Palantir shares jumped 11% Thursday after the company announced a partnership with Microsoft. The companies will sell secure cloud analytics and artificial intelligence capabilities to the US defense and intelligence communities. Palantir generated 54% of its revenue from government clients during the second quarter. So the point here is things are looking great for this company, but you have to be very careful. You have to don't get too greedy. Don't dump all your money at once. Right now, it's up to just today, it was up, I believe, 11%. But in the past 2 days, it's gone from like $24. Actually, if I do 5 days, the low on it as at in the past 5 days was about $23, and now it's up to $29.37. So there is a lot of momentum in the stock. I believe the volume seem to be increasing, which is showing a lot of interest, but you have to be very careful. We are only one bad news away from the market falling. And that is why I always say, before you invest in anything, be very, very careful about it, because you never know what will happen. And if you're taking certain risks in investing and putting your money into these companies, be very careful. Do not put all your money at once. I always say that, they always say that you keep some money on the side. Of course, don't invest with money that you cannot withstand to lose. There's always the chances of you losing money when it comes to investing. There's always a chance for you to have to hold a little bit longer than expected. And that's why, again, I try to do the long-term investing unless I stop believing in the company. If I stop believing in the company, then I sell it. And even if it's a loss, I get out of it. If it's a win, I get out of it. But if it's a company that I believe in long-term, I try to hold it long-term and I stick with it. Because at the end of the day, when it comes to investing, your goal is to, make money, right? And as long as you believe in the company and the company keeps doing the right thing, then you should hold on. One of the interesting things today that has caught my attention was really on the airline stocks. They went up a lot, I believe 3% today in comparison to what they've been doing recently, which I believe, again, the whole market went up today. So I think that's just the wave effect that is carrying most of the stocks. Now, if you haven't invested yet, all right, if you are not investing for whatever reason, I would like to know why, because at the end of the day, this is an opportunity for you to build wealth. And if you look at the wealthiest people in the world, they do have some stocks in their portfolio. They do have real estate, they do have stocks. And I think if you want to be as rich or at least be financially wealthy and reach that financial independence you're looking for, then it's important to also do something similar to what rich people are doing. That's the truth about it. Even if you're making money, a lot of money from your normal job, it's still important for you to invest so that your money can work for you. I hope that you found value in this one. If you have, don't forget to drop a like on the video. Don't forget to check out my next video as well, because I believe you'll find value in it. And don't forget to subscribe to the channel. I'd love to see you next time.